please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The big news from the world of business this afternoon: market regulator SEBI has intensified its probe into the unpublished financial information case. Sources say the market regulator has conducted searches on more than 40 brokers and analysts across several cities. Yash Jain joins us with the details. Yash, what are you picking up from your sources?
Well, exactly. In a major crackdown on the circulation of unpublished financial information through WhatsApp groups, market regulator SEBI has conducted search operation on more than 40 individuals is what we understand. And these individuals include brokers, analysts and people who are directly or indirectly related to these companies which are in question. Now, these search operations were conducted across Mumbai, Delhi, Bengaluru, but most of them have happened in Mumbai and they have been done in assistance with the city police. Now, the market regulator, through these search operations, have seized physical documents, laptops, hard disks, and the rationale really here is to look into what was stored and shared through these devices which have been seized. Now, an important development as we move forward from this point would be that market regulator could also look at getting in consultation with the Telecom Regulatory Authority of India, as these messages which are shown would be encrypted, most of them, and to really figure out a solution how to decrypt them and move with the investigation forward, they would need some sort of external help, for which they would look to talk to TRAI on how to go forward with this particular development.
Absolutely. So SEBI's investigation, they're intensifying. Thank you so much for those details, Yash. On to the big political story of the day. It is D-Day for former Railway Minister and RJD Chief Lalu Prasad Yadav. The CBI court is expected to give its verdict in the Fora scam case today. Lalu Yadav, who is the main accused in the case, allegedly fraudulently withdrew 84.5 crore rupees between 1994 and 1996. He was the Chief Minister of Bihar during that period. Ahead of the judgment, Lalu today appealed to his supporters to maintain law and order. He also alleged that the BJP is conspiring to put him behind bars.
हाँ, पूरे बिहार की जनता के प्रति आभार व्यक्त करते हैं और हमको इंसाफ मिलेगा न्याय व्यवस्था पर। आज न कल हमको इंसाफ मिलना है, आज भी मिल सकेगा और हम चाहे जो भी परिस्थिति होगी हम भाजपा को उखाड़ के हम फेंकेंगे। और भाजपा पूरा चाहता है कि लालू यादव को डिटेन किया जाए।
On to the other big political story of the day. Congress President Rahul Gandhi has taken a fresh jibe at the BJP. In a tweet, Rahul Gandhi has said, and I quote, "If the BJP had a film franchise, it would be called Lie Hard." This tweet follows a no-holds-barred attack from Rahul Gandhi last evening after he chaired his first working committee as the president of the Congress party. Armed with a 2G clean chit, Gandhi claimed vindication and attacked Prime Minister Modi not just over 2G but also on the Gujarat model, demonetization and his pet moniker to GST Gabbar Singh tax. Not just that, he also raked up the charges against Jai Shah, the son of BJP President Amit Shah, as well as the Rafale deal.
The Modi model in Gujarat, it was a lie. Clearly, when we went to Gujarat and we spoke to the people of Gujarat, they said there is no model. What is going on is the stealing of resources of the people of Gujarat. And that's their design. Whether it is 15 lakh rupees har bank account mein, whether it is 2G, whether it is the Modi model, that's the design. And one by one, the lies are coming out. There are two other lies, very big ones. Amit Shah, who is the president of the BJP, has a son who has converted 50,000 rupees into 80 crores in 3 months. That's the truth. Our Prime Minister has nothing to say about it. The Rafale deal is changed. A businessman is given a reward. Procedure is not followed. We asked 3 questions, the Prime Minister can't answer. That's the truth.
From politics to all the action in the equity space, Christmas came early for bulls on Dalal Street, helping benchmark indices end at record highs for the week. The Nifty hit the 10,500 mark intraday on Friday, but saw minor selling pressure to end 7 points lower. The Sensex is now only 60 points away from the 34,000 mark. Small and mid-cap stocks continue to rally, with the Nifty mid-cap and the BSE small-cap index closing at all-time highs. Now let's take a look at how global markets fared in trade yesterday. After the historic tax bill was passed by the Trump government, US markets closed lower for the day but posted a fifth consecutive week of gains. All three indices closed mildly in the red. So as you can see, all of them between flat to about 0.1% in the red. From equities to cryptocurrencies, popular cryptocurrency Bitcoin slipped below the $12,000 mark in Friday's trade. However, the digital currency has recovered from those lows and is now trading around 14,000. And as volatility grips Bitcoin, top economists maintain a wait-and-watch mode on the impact of the cryptocurrency, while IMF chief economist Maurice Obstfeld said that Bitcoin is still not a major threat to other currencies. Harvard economist Geeta Gopinath said that she doesn't see Bitcoin becoming a preferred medium of exchange. Take a look.
There is the technology that goes behind Bitcoin, which the financial world is very excited about. But besides that, it comes close to gambling when you bet on the Bitcoin. I do not believe it will be, I'm making a prediction, it will ever be a medium of exchange like the way the rupee is or the dollar is or currencies in the world are. I do not see how that's going to happen, because the minute there's a real threat of that, regulation will step in.
Bitcoin is an area where there is nothing that fundamentally ties down the value of this asset. And that always creates a risk. There's been a lot of interest because it's gone up a lot recently. But that ascent can't clearly continue forever. And when people realize that, we don't know what happens to the value. So, I tend to think that some people are going to make money, some people are going to lose money. I don't see it as a major threat at this moment.
On Friday, the government tabled the amendments to the Specific Relief Act, a 54-year law in the Lok Sabha. The amendments in the bill, if approved, it will make it easier to enforce infrastructure contracts. And that's not all. The amendments also provide for specific relief to select categories of infrastructure projects. Shireen Bhan caught up with experts from the sector to discuss the fine print of the government's proposal. Here's an excerpt of that conversation.
Jayant Maheskar, Vice Chairman and Managing Director of MEP Infrastructure, joins us. Mr. Maheskar, appreciate you joining us. As Rituparna was pointing out, that this is the government's efforts to move up the rankings as far as the enforcement of contracts indicator is concerned. It's also a fillip, perhaps, to infrastructure development in the country, which has been plagued by time overruns, cost overruns. How significant is this if this does go through?
Good evening. As far as this particular special bill, the amendment to the 1963 Act, which has been already enacted, is concerned, I think it is definitely going to be a revolutionary move in terms of, I would say, expediting the infrastructure projects which are currently being operated in the country. The government has recently announced its ambitious but doable the Bharatmala program, where the government intends to do a substantial amount of work in the next 5 years, close to around 7 lakh crores. While doing all of this, it is very important that such kind of amendments, if required, are done to the current scheme of things, which will enable the completion of these ambitious projects.
Okay, so you believe that this could be revolutionary, but let me ask you about specifics. And the point that we were just raising there, this bill proposes that to provide for substituted performance of contracts, where a contract is broken, by the sufferers would be entitled to get the contract performed by a third party or by an own agency to recover expenses and costs, including compensation from those who fail to perform his part of the contract. As I pointed out, the infrastructure sector has been plagued by time as well as cost overruns on account of a multiplicity of things, clearances, approvals, and so on and so forth. Could this be a cause of concern for developers?
As far as this particular point is concerned, in the current scheme of things where the model concession agreement is fairly defined, it clearly gives the government or the, I would say, aggrieved party to move the court in terms of any disputes which are there as a part of the contract. Having said that, the authority also has a right to substitute, which is available in the majority of the, I would say, PPP projects which are being executed in the current scheme of things, where in case of a default on account of a concessionaire or the party concerned, the authority is enabled to replace this particular party with a new party at the cost and risk of the existing concessionaire.
We've also got lawyer Busby Singh joining us. Mr. Singh, appreciate you joining us. We were just discussing whether the new section that's being introduced by way of this amendment, section 20A, which basically says that the court shall not grant injunction in any suit where it appears that the injunction would cause a hindrance or delay in the continuance or completion of an infrastructure project, will stand legal scrutiny.
See, I think if I've understood correctly, what they're proposing to do is this amendment is only in the Specific Relief Act, and they are trying to debar court to interfere from weighing the option of specific performance versus the compensation/damages. So in kind of any infrastructure contract where there is one party is not performing, whether the other party can enforce that contract and force them to perform, whether if any kind of a damages or a compensation is sufficient or not, I think that discretion is there with the court to determine. I think they're trying to take away that. I don't think that should be a problem. But whether it is going to stand scrutiny or not, I think it's a simple amendment they'll be carrying out. But that will solve a problem so far as the court's interference is concerned, I'm not sure, because it is a contractual issue and we have the suit of any nature are excluded where there is an arbitration contract. So they have to make multiple amendments in a couple of other acts. Now, question on withstanding scrutiny of the law, I think it is to be seen from the constitutional point of view that if there is a legislative competence and it is within the domain of the constitutional amendment provided, then I don't see that should be much of a problem.
Okay, you don't see much of a problem. My final question to you, Mr. Singh, they're also talking about special courts to be set up, designated to try suits in respect of contracts pertaining to infrastructure projects and to dispose of such suits within a period of 12 months from the date of service of summons. This could be a big step, but how realistic is this?
I honestly do not think that creating a separate court is a solution, because in large infrastructure contracts, the number of disputes are not many so far as creating a new body is concerned. But like in the High Courts, 2 years back, the amendment was made and these large financial disputes were given to the financial courts within the High Court itself. I think that kind of a jurisdiction still can be created to deal with large disputes or infrastructure disputes. But creating a separate court, I don't think that's a very practical. It requires a lot of amendment in a lot of places and a lot of passage through the parliament, which can take a really long time.
All right, Mr. Singh and Mr. Maheskar, appreciate you joining us here on CNBC TV18 to explain to us the significance of the amendments to the Specific Relief Act that's been moved by the government.
The government's move to set up a high-powered group of Indian automakers to boost its Make in India campaign has exposed deep cracks within the auto industry. CNBC TV18 reports that while Tata Motors, Mahindra & Mahindra, Ashok Leyland, Hero MotoCorp and Force Motors have been included in the group, India's largest car maker, Maruti Suzuki, has not. And that has Maruti feeling slighted.
I don't think there is any country, this is my belief, I don't think there is any country in the world where there is no cap on royalty. That means you can send whatever amount outside. If that is the case, then what is the incentive for foreign OEMs to do engineering in India?
My thinking on royalty is that government should not put any caps, that the market conditions and the need to be competitive will force the parent company and the Indian subsidiary or licensee or JV partner or whatever it is to make cars which are expensive, which are competitive in the market.
8 years after the government relaxed royalty norms for foreign companies, the issue is back in focus. In the process, it has driven a deep wedge into the auto industry. A high-powered group of Indian automakers set up by the government has come out strongly in support of reintroducing a cap on royalty. This is being positioned as a way to incentivize foreign companies to invest more in design and engineering work in India. But Maruti Suzuki, which has not been made a part of this group and pays almost 6% of its net sales in royalty to Japanese parent Suzuki, feels any move in that direction will have the opposite effect.
The government does not intend to go back to 1991 kind of situation. This committee seems to me to be somewhat out of tune with what I understand of government policy. Because government policy seems to be very clearly in favor of inviting foreign direct investment, foreign technology, so that with that investment and technology, more products can be made in India, supplied not only to the Indian market, but exported out of India.
Maruti says that the creation of a forum of just Indian auto companies runs counter to Prime Minister Modi's Make in India campaign, which is pillared on inviting more foreign investments into the country.
If you're talking of Make in India, as you just said, Maruti and Hyundai make more than 2/3 of the cars in India. So, and if you take the other foreign companies in India, including GM and Ford and Renault, then it's much more than that. The three companies you mentioned, only 2 of them make cars. And together, they may be what, about 10% of the market?
This may be a dig at M&M and Tata Motors, which are members of the select group that has shared ideas on capping royalty. But Ashok Leyland, which is also a member of the group, has said that deciding on the composition of such a group is the government's prerogative. This is not the first time the industry has found itself split down the middle, but this is surely the first time this division is taking place in the form of a Swadeshi versus Videshi debate. In New Delhi, Ranujai Banerjee.
Ude Desh ka aam nagriko Udan. That's the Modi government's ambitious project to link small cities via air routes, which not just hatched but took wings this year. Loosely translated, it means may the lay Indian fly. But CNBC TV18's Ashpreet Sethi and Arif Sherwani report that while the takeoff was smooth, the flight itself is not without turbulence.
हमारे देश में गरीब व्यक्ति की एक पहचान है, वो हवाई चप्पल पहनता है। और मैंने उस मीटिंग में कहा था कि मैं चाहता हूं कि हवाई जहाज में हवाई चप्पल वाले लोग भी आए।
This is how the government sold the Udan story. The biggest pull for passengers under phase 1 of the Udan program is affordability. But while the ambitious project to put more smaller Indian cities onto air traffic routes had everyone at Twitter quite literally, the numbers show that the majority of Hawaii Chappals are still on terra firma. Since the inaugural flight in April, only 26 of the 128 routes allotted under phase 1 are operational. Carriers like Air Deccan, Air Odisha and TrueJet have failed to meet the launch deadlines multiple times, for reasons as varied as lack of slots to lack of aircraft. Airlines say the big hurdle to 100% success is poor airport infrastructure and costly aviation turbine fuel, even though some states have cut prices for aircraft flying on the regional connectivity routes. Industry says the aviation ministry must go on overdrive to make Udan successful.
The achievement is that they have been able to, from concept to operationalization in the last year has been done, so that's a great achievement. In terms of the challenges, the capacity constraints at the metro airports has to be looked at, and the second is the integrated development at the terminal part of the infrastructure has to be augmented. So it's good if government can also get the private people on board for the development of these infrastructure, and as such we are clipping in more than 20% as far as the passenger growth is concerned.
But this has not stopped the government from rolling out Udan 2. Seaplanes, helicopters, 19-seater planes. This is what Udan 2 will offer. Prime Minister Narendra Modi once again took the lead, took the first seaplane on 12th of December for his election campaign in Gujarat.
It's really a great thing for the country, and definitely it is going to be very useful for a common man.
So even though round 1 is far from fully operational, the government is pushing ahead with round 2, and so far seen bids from 17 airlines for 141 routes. The good news is that airlines seem gung-ho on the Udan mission, because a few of them like Indigo, SpiceJet and Jet Airways have chosen to even forego the subsidies the government was prepared to offer. And with underperformers in Phase 1 likely to lose out in Round 2, it appears that the government is determined to keep the Udan program at cruising altitude. In New Delhi with Ashpreet Sethi, Arif Sherwani.